Wanted to take a look at the Home Depot HD stock. I'm looking at a lot of the home builder stocks. Home Depot, of course, being sort of a non-pure play, but certainly in the industry. I'm looking at the ETFs, the home builder ETFs, all through this week, and I've got a bunch of stocks lined up to look at for this. And I wanted to take a look at Home Depot. Now, here's the thing. I look at everything starting from the position of the economy, and I believe the economy is very strong. And that's unfortunate for stocks like the Home Depot HD stock. The reason being that the Federal Reserve is going to have to take action and slow this economy growth rate down. This could mean higher interest rates. We're seeing the long end yield curve moving higher. This will affect a lot of what happens with revenues for companies. For now, the economy will very likely see some good growth numbers coming in this Friday with unemployment and non-farm payrolls. Then next week, inflation. Unfortunately, this will be good news being bad news because it's too fast, too much. The Federal Reserve needs to take action to slow down the growth rate of the economy. Long end yield curve will continue higher. Companies like Home Depot, HD stock, will likely miss their numbers going through 2025. Because of that, HD stock likely to move lower. It has missed its numbers previously, and HD stock sold off some 30% because of that. Let's break down some of the numbers I'm looking at, the economic data that is pushing this economy forward, and the reason why I would be selling the Home Depot HD stock. Let's jump in. Here's a 4-hour bar chart on HD stock, the Home Depot. Home Depot, of course, sold off since early December, sold off even more just prior to the holiday break when, what date was that? That was roughly about the 20th, 21st, when the Federal Reserve said that they're not going to be lowering interest rates as fast as they expected. The whole stock market has sold off. But since then, the broader stock market has been rebounding. The long end of the yield curve, the 10, trading at about 4.62, pushing, looks like it wants to hit 4.65. The reason, twofold. Number one, tax cuts coming from Trump. Expectations are that he will roll his tax cuts forward. That is inflationary because there won't be anybody to pick up the slack. Unfortunately, his methodology of picking up the slack on the tax cuts to corporation is to raise taxes on consumers to pay for that tax cut. The debt ceiling right now is going to be a big conversation in the next couple of days. We'll see how that plays out, but that's what's happening is consumers are going to have to pay for those tax cuts to corporations. Consumer incomes are finite. Because those consumer incomes are so finite, the eventuality is consumers having to pay more and more for consumption, that interest rates will, of course, eventually move lower when the stock market, when the economy slows down somewhat. But companies like Home Depot, HD stock, they start to hit revenue misses. Here's a broader look at this. You can see HD stock has mostly trended higher and higher. Interesting thing about this is when you compare HD stock to the broader stock market, look all the way over on the left-hand side. You can see 2020, the sell-off in March when the stock market sort of capitulated. But I want you to take a look at 2022. This is when HD, the Home Depot, missed their earnings goal for that year. The stock sold off over 30%. If Home Depot misses again, and this is broadly going to happen probably throughout the entire market, except for maybe some outlying stocks, semiconductors, won't say any names, you know what I'm talking about. We could easily see Home Depot HD stock selling off significantly if the Federal Reserve has to step in and take action on an economy that is growing too rapidly. Again, Friday, we get unemployment rate, non-farm payrolls, and I expect that to be a pretty solid number. I expect a reaction from that from the bond market is higher interest rates. Stock market's going to sit there and say, wow, we keep getting these numbers and it's not looking good. This is a chart that I keep kind of looking at from various angles median sales price versus M2 money supply. The M2 money supply is the red here. Total money in the system for the United States, M2 money supply, versus the sale price, the median sale price of homes here in the United States. Pretty strongly correlated. Unfortunately, the M2 money supply continues to move higher, which is good news if you're a homeowner. Unfortunately, this is moving up higher too fast, and the Federal Reserve is likely to have to take action, which means the M2 money supply is going to be cinched up a little bit, which means median home prices could potentially move lower. Great news. Unfortunately, the economy is probably going to contract somewhat, and so companies like Home Depot will not see their revenue gains as expected. Here's a better look at the M2 money supply for those of you who are just joining my channel. I'm an economist first and foremost. This is one of my key things that I look at. It's such a big thing right now, so I keep focusing on this. The growth rate of the money supply determines pretty much the growth rate of assets, the economy, inflation. There's a huge correlation with all three. Here is core PCE, the inverted chart, to kind of show you the correlation versus the growth rate of money supply. Money supply continues to move higher and higher. Inflation is right there. The Federal Reserve will take action. Home Depot will sell off along with the broader stock market. Federal Reserve balance sheet, they need to cut this further and further because commercial banks continue to deposit more and more. 30-year mortgage, this is something that certainly affects companies like Home Depot and HD stock. The 30-year mortgage rate continues to move higher. We're likely to cross 7%, and I believe that could happen as early as the end of next week with the two economic data points we're seeing right now. Friday, the non-farm payrolls, and of course on Wednesday, inflation numbers with CPI. We could see inflation, and we could see the long end of the yield curve moving higher. But as it turns out, if you look at housing numbers themselves, a lot of numbers are showing that consumers are basically biting the bullet, saying we got to pay 7%. So we'll see how that plays out. Here is quarterly revenue on Home Depot. Year-over-year changes continue to gradually move higher and higher, but it's the annual rate that I really want to take a look at. 2022, you saw 157 billion versus 2023, 152 billion. That was the 30% sell-off that we saw in the chart for Home Depot. More likely than not, there will be a miss that in 2025, I don't think we hit 163. I think we go below the 158 in 2024 for revenue, projected revenue or actual revenue for Home Depot. Because of that, that's why I see HD stock moving lower. And you could see 2022 going in through to 2023, the big drop downward. That was a huge move, 389, roughly the very peak for Home Depot in 2022. The bottom there, about 250. That's $140 billion or $140 taken off the stock. This would bring HD stock down to about 250 again if we saw that. 350 again. We'll see how that plays out. Projected earnings, I see a miss at 1565. I say we go below 15. Right now, U.S. 10-year Treasury is your benchmark rate. 4.622 was the print I saw earlier. I printed this up last night. HD stock projected earnings per share is at 1565. I think we have a miss on that, and it's sub. It might go below 15. Regardless, the price to yield given future projections is a solid 4%. That's a good investment. The risk is what you're looking at. You can buy into the 10-year right now and lock in 462. You have a lot of risk with Home Depot right now given the future prospects of this economy. You could buy in on those treasuries at 462. Hold them for a year, year and a half. A lot of these stocks will sell off over the course of 2025, including HD stock. HD stock, I showed you the chart earlier, tracks the broader stock market, very strongly correlated. So once we get to a point where there is a solid sell-off in the economy or in the broader stock market because the economy has slowed down through 2025 into 2026, you could sell those 10-year treasuries at a pretty nice profit. Then get back into HD stock itself. I look at HD stock, Home Depot. This is a pretty good bastion of what's going on with the entire economy. But it all boils down to the money supply. The money supply is growing too rapidly. All assets are following, whether that be housing, gold, the stock market. These are all assets being driven by the growth rate of the money supply. The money supply is going to create too much inflation. The Federal Reserve will have to step in. All this before Trump even puts his tariffs up, which could be catastrophic to the economy, especially a company like Home Depot, where a vast majority of its products come from overseas. Those products are going to see increases 5, 7.5, 10% increases in prices to consumers. Consumer incomes are finite. So this will affect the overall revenue of Home Depot. HD stock, along with the entire stock market, sells off. Make sure to hit the like and follow button. There's links to my Substack newsletter down below. We'll see you in the next video.